Thank you for joining today's webinar. We're going to go over your questions. We're also going to go over the Mega Backdoor Roth Solo 401k for making contributions when your business is taxed as a S-Corporation or an LLC taxed as an S-Corporation or even a C-Corporation. We go live twice a day. So here at 10 a.m. Pacific time, we'll be going live again today at 1 p.m. Pacific time as well. Let me share some slides here and we'll get started. So today we're going to do a live calculation of making Mega Backdoor Roth Solo 401k contributions when your self-employed business is an S-Corporation, an LLC taxed as an S-Corporation, or even a C-Corporation. Essentially, W-2 wages from your self-employed business. Give me one moment here. Oh, I share my screen. Okay. Let me blow this up a little bit. So before we do some live calculations here, let's understand first that contributions have to be based on your W-2 wages from your self-employed business. If your self-employed business is an S-Corporation, C-Corporation, or an LLC taxed as an S-Corporation, for example. So it's not based on passive income, it's based on earned income, which would be W-2 wages. So you're going to want to look at a W-2. You're going to look at box 1 of the W-2. That's the gross wages. You may need to add the amount listed in box 12A to box 1. So that way you have the gross wages for calculating the contribution. So voluntary after-tax solo 401k contributions when your self-employed business is an S-Corporation, how much can you contribute? Well, it's going to be the lesser of $69,000 for 2024 and then $70,000 for 2025. You're going to want to reduce those amounts by any employee or employer contributions that you make to the solo 401k. In short, the overall limit is $69,000 for 2024, and for 2025, it's $70,000. So you cannot go over those amounts when making voluntary after-tax solo 401k contributions for those particular years. Ignore any catch-up contributions because catch-up contributions do not apply to voluntary after-tax 401k contributions, including solo 401k contributions. Catch-up means that extra $7,500 for those age 50 or older. Well, again, catch-up contributions do not apply to voluntary after-tax solo 401k contributions. Those have to be made to the Roth solo 401k or the pre-tax solo 401k. Why? Because the regulations do not allow for the catch-up contribution to be applied as a voluntary after-tax solo 401k contribution. Also, your voluntary after-tax solo 401k contributions are not impacted by your daytime employer 401k contributions. For example, let's say you also work for a daytime employer such as Amazon, and you participate in Amazon's 401k and you max out the contribution to that Amazon 401k plan for 2024, for instance, with the limit being $69,000. Excuse me, for 2024, the limit is $69,000 for 2024. Therefore, you can still do the Mega Backdoor Roth Solo 401k strategy for your solo 401k if you also have a self-employed business on the side. So if your self-employed business is an S-Corporation, for instance, and you pay yourself W-2 wages from that S-Corporation, you're going to be able to contribute all the way up to the overall limit of $69,000 for 2024 to the voluntary after-tax solo 401k bucket. And then you can convert that amount over to the Roth Solo 401k, even if you've already maxed out your contributions to the example of the Amazon 401k plan. Now, keep in mind, however, that if your daytime employer is a 403b plan, then that will impact your solo 401k contributions, including voluntary after-tax solo 401k contributions. That 403b exception essentially hinders your ability to maximize your voluntary after-tax solo 401k contributions because you have to reduce your voluntary after-tax solo 401k contribution by any contributions that you or your employer have made to your 403b plan. That's known as the 403b exception, but that same rule doesn't apply to daytime employer 401k plans, meaning you can still maximize your voluntary after-tax solo 401k contributions and does the Mega Backdoor Roth Solo 401k strategy. Okay, let's switch over to our calculator, and we're going to go over our calculator. We're going to go over some examples of how to calculate your Mega Backdoor Roth Solo 401k contribution. We're going to do an example for 2024 tax year, and then an example for the 2025 tax year. So let me share that page with you here. Give me a moment here while I go to our calculator on our website. Okay, here we are. I'm going to go over some examples here. Let's see if we can make this window bigger. Here we go. So here's our solo 401k contribution calculator found on our website. So let's do a 2024 calculation first. So again, here we're doing a Mega Backdoor Roth Solo 401k calculation for a business that's taxed as an S corporation, C corporation, or if it's an LLC, taxed as an S corporation, which means it's going to be based on W-2 wages. So income for 2024, the maximum voluntary after-tax solo 401k contribution is $69,000. So let's plug in here $69,000 of W-2 wages from your self-employed business. Again, it's for a corporation, so W-2 wages. We're going to change the calculator to plan year 2024. We're going to click on calculate. Let's get the printout here. See if we can make this window a little bigger. Okay. So 69,000 of W-2 wages is what we plugged into the calculator. So that means on your W-2 box 1, you are reporting 69,000 in gross wages. So the calculator here, what it does is that it gives you a calculation for all the various contribution types. But again, today we're concentrating on just making voluntary after-tax solo 401k contributions. So no other contributions, just voluntary after-tax. So based on $69,000, your income is $69,000, which means that the calculator will not subtract any self-employment income tax because when your business is taxed as an S corporation or a corporation, you're not required to subtract 1/2 of self-employment income tax from the calculation. So based on $69,000, even though it doesn't tell you on this calculator here, unfortunately, you are going to be able to contribute the full $69,000 as a voluntary after-tax solo 401k contribution. Because all you need is $69,000 of W-2 wages to maximize that voluntary after-tax contribution because it's a dollar for dollar calculation. So dollar for dollar, meaning it's based on dollar for dollar that you report in W-2 wages in that box 1. So $69,000 is all you need to maximize your voluntary after-tax solo 401k contribution for 2024. And then you would immediately convert that over to the Roth solo 401k or the Roth IRA after you make that contribution to the voluntary after-tax solo 401k bucket. Let's do an example for 2025. So let me go back here. Oh, that's the wrong one here. Let's go back to the right one. Okay, let me go back to our calculator here. Give me one moment. We'll get to that screen in a moment here. Let's get to back to the calculator here. Do a search for it here. One moment. You can always search for our calculator on our website by using that search box there. Okay, here we are. We just did an example of maximizing voluntary after-tax solo 401k contributions for 2023 for a self-employed business tax as an S corporation or C corporation. Let's do an example now for 2025. So the overall limit, again, for 2025, the voluntary after-tax solo 401k contribution overall limit is $70,000. So if we plug in 70,000 to our calculator here, we click on calculate. Let's see here. Okay, so here, all you need is $70,000 of W-2 wages, box 1, to maximize your voluntary after-tax solo 401k contribution for tax year 2025. Why? Because again, when it's an S corporation or C corporation, self-employed business, you use your entire gross wages. You're not required to subtract 1/2 of self-employment income tax from that box 1 of W-2 wages. So as a result, it's a dollar for dollar contribution figure. So if you pay yourself at least $70,000 of W-2 wages, you can do that full $70,000 as a voluntary after-tax solo 401k contribution. And then once you make that contribution to the separate holding account under the solo 401k, the bank or brokerage account, then you can convert that $70,000 to the Roth solo 401k or the Roth IRA. So in short, you only need to pay yourself a maximum of $70,000 to contribute that full maximum solo 401k contribution of $70,000 as a voluntary after tax, and then convert it over to the Roth solo 401k. Okay, let's take a look at one more example here. Let's take a look at a example for 2024 again. Let's use 50,000 this time of W-2 wages from your S corporation for 2024. So here, 50,000 of W-2 wages, you're going to be able to actually contribute a full $50,000 as a voluntary after-tax solo 401k contribution for tax year 2024. Why? Because it's a dollar for dollar contribution when doing it as a voluntary after-tax contribution, which means it's not a percentage. It's not going to, you don't need to reduce that $50,000 figure by any self-employment income tax, because that's the difference between an S corporation and a sole proprietorship, is that you're not required to reduce your gross wages by 1/2 of self-employment income tax. Therefore, all you need is $50,000 of W-2 wages, and you can contribute that entire $50,000 as a voluntary after-tax solo 401k contribution. You're not going to be able to make any other contributions to the solo 401k if you make it as a full $50,000 contribution, because you can't contribute more than you make. So if you only report $50,000 of W-2 wages from your self-employed business, then $50,000 is the maximum you can contribute. And if you choose to make that $50,000 contribution as a voluntary after-tax solo 401k contribution, then you won't have any more W-2 wages to contribute any employee or employer pre-tax contributions. In future webinars, we'll do sample calculations of making employee contributions and employer profit sharing contributions. Today, we wanted to hone in on making just voluntary after-tax solo 401k contributions for an S corporation or C corporation, or an LLC tax as an S corporation, to illustrate that all you need is a certain amount of W-2 wages to make your voluntary after-tax solo 401k contribution. So we did an example a little while ago where you reported for tax year 2024, for example, $69,000 of W-2 wages, which translates to being able to contribute the entire $69,000 to the voluntary after-tax solo 401k, and then converting it to the Roth solo 401k or the Roth IRA for 2024, or excuse me, for 2025. For 2024, we also did an example of $69,000 where all you need is $69,000 of W-2 wages, so box one, to maximize your voluntary after-tax contribution for 2024 of $69,000. Okay, so those were the examples I wanted to go over with you today regarding the Mega Backdoor Roth Solo 401k contribution for an S corporation, C corporation, or an LLC tax as an S corporation. Let me share another screen with you here. So back to the earlier page I was sharing, let's take a look at a couple items here. Okay, so we went over an example of maximizing the 2024 Mega Backdoor Roth Solo 401k for 2024, which is a maximum of $69,000. So in review, you just need to pay yourself $69,000 of W-2 wages for tax year 2024, and you can contribute that entire $69,000 to the voluntary after-tax solo 401k, and then convert it over to the Roth Solo 401k plan. Keep in mind that you have until March 15, or if you file for an extension, until September 15 to make the contributions if you're self-employed businesses taxed as an S-corporation. And so you will have until then to make the 2024 voluntary after-tax solo 401k contribution. For the 2025 voluntary after-tax solo 401k contribution, you just need $70,000, and you have until next year in 2026, March 15 of 2026 or September 15 of 2026 to make that full $70,000 voluntary after-tax solo 401k contribution. Okay. So that concludes today's presentation. Again, we're going to be back live again here at 1 p.m. Pacific time. Until then, you have a great day.